Now, these are some of the things, the tricks of the trade, are very obvious. I'm sure, I don't want to state the bleeding obvious, because I'm sure many of you do these things. But it's a surprise when you look at the statistics how many people don't do these things. The first thing is fortnightly repayments. A lot of people that pay monthly their home loan yet are being paid fortnightly. Now, you can save $89,000. Now, this is based on a $250,000 loan, as a working example, over 30 years. You can save $89,000 and take 6 years off the life of the loan just by paying fortnightly rather than monthly. Now, the reason why that works is there's a couple of reasons. The first thing is, if you think about monthly, if you paid twice a month, you'd make 24 payments in a year. But if you pay fortnightly, you're making 26 payments. So you're effectively making an extra half month's payments a year. The second thing is, because you're paying fortnightly, you're paying off slightly faster than the loan schedule, so your payments are paying off principal and reducing the interest you'll pay over time. Hence, that number is $89,000. It's a surprising the number of people who don't pay in that cycle, so do tell your friends. It does save you money, and obviously the more money you pay off quicker, the less interest you pay, the faster you'll own your home, or be able to use the equity in it and have more equity in it to be able to use to invest. The second tip is an offset account. Having your money in an offset account, and this is an example, just $2,000 staying in an offset account during that period of time can save you about $10,524 over that life of the loan. Again, which is about half a year's payment. So just having money sitting there in that offset account, again, works for you. It's a good tax-effective solution, because if you have the same money sitting in a savings account, you'll be taxed on the interest on that. Whereas sitting in an offset account, obviously it's offset against the home loan, you're not taxed on that if you're an owner-occupier. So a very strong idea there as well. Number 3, payday. Again, a lot of people get the paid into their account and then a couple of days later make the home loan payment, so the money is lazy money. You can pay it directly into your home loan. You can use it by doing a line of credit. Now, there's pros and cons of a line of credit. The pros is the money goes straight into your account, and then you pay out of that, so it's always all your money is working against your home loan. The con of it is, if you're not good at budgeting, you can easily spend more than you think and not make progress. So you'll be a very good and disciplined person to use a line of credit like that. I'm not in that boat. The other thing is, look, price of a coffee, I'm $2.50, I think, is my coffee in the city, which is quite cheap in the city. You know, if I miss 4 coffees a fortnight, that's $10. You'd think that's not much, $10 a fortnight. $10 a fortnight, if paid onto your home loan above what you're supposed to be paying, can save you $9,385 in interest across the life of a loan, and about 9 months on the account. So even just a small extra repayment of $10, $20, something you might not even notice, can increase. So if you can pay above the level, it always helps you bring down that loan quickly. Obviously, only certain loans you can do that. Variable rates, fixed rates, I wouldn't recommend it, because there are disciplines around early repayment charges that doesn't allow you to do that. But again, it's another tip. I do this one as well. It's a great way to just do it. And sometimes you can do it for Lent, just give it up for a while and give something up and put that money into the home loan. And again, over time, those sort of things add up. The other one is home loan packages. I think most people now have a package, but I just want to remind you of the benefits of it. Packages are quite cheap. I mean, generally there's a small fee. For the Commonwealth Bank, it's $350. But the savings on that, if you add up the interest rate discount you get with the loan, the fee waivers you get with that, the credit card, the free credit card, the transaction account, which is free, and the insurance savings if you have home and contents. In a year, again, we've worked this scenario up here for a $250,000 loan and looked at $300,000 loan and looked at how much it'll save you, and that's about $2,896 a year. So, when you think about how much you earn, you double that before tax. That's $5,500 what you have to earn. You can save by being smart on the product you've got. Again, a home loan health check, best way to find that. So as I said, These tips are very obvious things. We have a home loan health check. Most of our lenders always make sure that they're working with you to maximise your opportunity to save money. So do talk to them with your existing loan or a new loan from another organisation. One of the other things I'll add to this presentation is splitting your loan as well. Splitting your loan, people always say, should I do fixed rates or should I do variable rates? And I always say do both. Many people try and predict where, just to understand, people are often confused. Fixed rates are priced very differently from variable rates. Variable rates are priced off the cash rate with a bit of with an extra on for the cost of us borrowing money from overseas to lend it to you and various other things in there. Fixed rates are priced off the bank bill swap rate, which is where the financial markets think the cash rate is going to go over time. So often what people try and do is they move into fixed rates when they see interest rates going up and start moving to fixed rates. Now the problem with that is that's already predicted into the pricing of fixed rates. So people often try and beat the markets and go with the cycle and don't get the timing right. I always say there are different reasons to have a variable rate and a fixed rate. A variable rate gives you flexibility. You can pay more off, you can redraw if you need to, and it allows you to manage your money well. But you have got the upside of if cash rate goes up and you'll be exposed to that. There's also an upside, that's a downside, but an upside if cash rates go down, you get the benefits of it. Having said that, a fixed rate gives you certainty. If you're worried about your income, if you're worried about earnings and commitment level, it means you know what you're going to pay each month. So I have a bit of both worlds. I split my home loan. I put some in fixed, so I know exactly what I'll pay over the next 5 years from that part, so I don't have to worry about things. And some in variable, and any extra cash I've got and some of these tips I've given you, put into the variable. And that's another thing I think most people, if you're smart, you do. There is a downside of that. Again, I have to say there's a downside. Fixed rates, because we have to go out and fix them, there's a contract from the bank with a swap behind this, means that if you do want to break early, if you sell the house early, you want to pay off the loan, there can be a repayment charge, which can be quite considerable, depending on how the market's moved. And that's just the way we have to pay the people we borrow the money from to lend to you. So again, there's downsides of that. Understand the risks. Most good lenders will be able to explain that to you. But I always say, split your loan, you have the best of both worlds. I hope these things have given you a few quick tips. Thank you very much.